Today was such a great example of making sure that when a trade is not going the way you want it to go, you just ditch it. And first up this morning, we had an S&P trade in the Sector Secrets Mastery where the idea was to buy the 28 October 686 or 685 call. Now, I give the choice for strikes for the sole purpose of hoping that traders can find enough budget at the higher strike to buy 2 to 3 contracts. And if that's not an issue at all, go with the deeper in the money strike where 2 to 3 contracts is an easy entry at the aggressive level. So this is not that I like them both equally. They're both valid, but I would prefer the price that allows a trader to buy more contracts at the aggro. Now, in this case, we entered at that trade. We entered this trade at that price. Notice the pricing is in the ES. We're watching the ES for buying the 685s. And, just kind of grand opening, grand closing. Got down to that 69.16, got down to the 69.14.5. And then ultimately, it just wasn't enough to keep going. And in this little dip beyond the support level, we also broke the previous session close, and that's why I had to tighten the stop, and I took a loss. And that loss was from $180 and $185 per contract, where I was risking 15% of premium paid. And that's a paper cut. Notice I'm not risking all $100 or $180. This is how it looked. I took a loss at 152 from the 185 entry and 148 for the 180 entry. So first thing in the morning, I'm in a small but irritating hole. I know that chop the day before the FOMC, the day before major earnings is not unusual, but for the most part, the equity markets look in terms of their relationship to the previous session close, there seemed to be some room to run. Here's a really important tip. Do not get back into the symbol that just took your lunch money, right? That's going to borderline trigger some revenge trading. And after the loss in the S&P, the next trade that we looked at, because the NASDAQ was still pretty strong, was NVDA. So notice I didn't go back into the S&P trying to get what sort of the bully took from me. Not at all. So next thing that we looked at 10:14 was a setup in NVIDIA to buy the 31 October 192.5 calls when price got down to 193.27 to 192.96. You can see these dotted lines right there. That's my zone. That's the lower eighth of the Darvis zone. So the zone is pretty much automated. The support and resistance of the Darvis plots. And then all I'm looking to do is buy when we get into that zone. So once again, we get a little bit of noise in between. Now, let's talk about defining the noise. One of the things that we want to do when price goes through the previous session close, that did not happen here, we never broke the previous session close, is when that happens, like it does in the S&P that we just looked at, I'll switch from 25% risk on premium to 15, right? So there was never a breach here. And one of the things that happened, and I'm going to show you right now, with the price of the option. So here we have the price of NVIDIA. And when price got down to that level, you can see that prices were trading really anywhere between about 365 and 360. So that's going to be ultimately what you're paying per contract. So the first thing I'm going to do is let's take the higher number here, right? And I'm going to multiply that out by 0.75. And what that means is when the price of the option that I bought drops down to $2 and I'll subtract a nickel from that. When it drops down to $2.68, I'm going to take my loss. Again, I'm not risking max debit. I never do that, right? My risk is to the option premium dropping to $2.68. And you can see here, we took that little divot down there for a little while, but it never got below. Take a look at this support here. It never even got below $3. it got to about, you can see here, about $3.31. So while irritating to lose about 30 to 35 cents per contract, it's not the 25% premium risk. And as the morning kind of drags on and price action still not doing what I need it to do, I'll also be open to changing the risk to a 15% stop, which is what I eventually told traders to do, right? And so whether that's the 360 or the 365 entry, I know now that if price breaks down below 305 to 301, I'm out. Well, we didn't hit that level either. So you'll notice that eventually I said, hey, this isn't doing what we need it to do. It's meandering. I want to give it a little bit of leash, right, to move, but I'm going to tighten the leash because it's just not being a good dog. And as long as it doesn't drop down to those price levels, there's nothing for me to have to change in terms of my target. I'm not going to change anything about my being in the trade. I'm just going to shorten the leash on the risk. So, and I'll tell you, so through this window, I now have 15% or 15 cents on the dollar premium risk. And right here about 11:30, I start yoga every afternoon. So what I do is I place an alert a nickel above where I would have to get out. So from 11:30 to almost 1 o'clock, I'm going purely by the alert on my iPhone. Just to give you a reality of, am I lingering and watching this every single candle past 10:35? No, I am not. Now I have an alert placed, and if it breaks down below, I'm going to be notified. Okay, so then I get back to the chat room and I say, hey, who woke NVIDIA up? And this is where not only having not a max debit and not even a 25 premium risk gives me some latitude to stick through this. Now remember, I did this with the S&P, the prior trade, and I took my paper cut. I'm happy to be wrong quickly. I would have been happy to be wrong quickly here, but it gave me enough movement and off NVIDIA went. So around 10:30 on Tuesdays, I actually present in the Sector Secrets Mastery like I do Monday through Friday from 9:20 to about 11:30, sometimes a little bit after. I do that. And then one time a week, I'm also in the Mastering the Trade Room. So I'm in this transition, bringing in another group like I do once a week. And I said, hey, since we're here, let's talk about the last trade that I'm even going to consider. And I let them know it's been a tough morning, but I took a loss on the SPY and then I'm waiting for the NVIDIA trade to wake up. And right at 10:30, and this is right near my cutoff. So I'm managing two rooms. I'm just giving you the background so you can see that all of us are busy. All of us are going to be managing different things. We're getting phone calls, texts, people walk into our office. We're retail traders, you know. We deal with circumstances sometimes that are more difficult than quote unquote professional traders, you know, meaning distraction. I don't get to hold myself up away from the world while I'm trading, and I doubt you do either. So let's talk about some of the realities. So I'm going to stop trading at 10:35 looking for new day trades, but I had about 4 minutes left. And at 10:31, as I'm bringing in the other group, so now there's about 1,000 of us that are looking at these trades, I said, hey, you know, there's a minor low that seems to be forming in the NQ, and I would like to see it form around this Darvis level. Right? Notice every one of the trades I took today were Darvis, these automated support and resistance levels. So we waited a few minutes. The Darvis confirmed as price went back above 26,029.5. And what we did is we got long on that confirmation that the buyers were there. If you don't know what a minor low is, you definitely want to check out what we're doing in the Sector Secrets Mastery, because this is one of the most powerful chart patterns, really price patterns that I've ever used. Chart patterns look for shapes using the candles. Price patterns use open, high, low, close, and they're far more objective. So if you like candlestick patterns, you're really using price patterns. If you like haramis or inside candles, that's a price pattern. Head and shoulders, cup and handles, flags, those are chart patterns, and I'm not really a fan. Again, if you're using them to good luck, great. If not, I love price patterns. We got the minor low and off it went. Now, if you want to learn more stuff like this, Look, we still have a $7 trial going for the Sector Secrets Mastery. We've been day trading. We've been on just a total tear, finding 1 to 2 trades almost every day. Some days when you don't see a video, that means I didn't have a day trade that day. So I'm not omitting the days that I have a loss by any stretch. This is just a day that I didn't have any trades. Monday, I had no trades. So we get the minor low and we buy the 629 calls. So at this point in time, we're maneuvering a lot, but let me show you what our traders know to do. You take the resistance of the Darvis and the support of the Darvis, and you cut it down to that last 12.5%. All right. And then when price gets into this area, you're buying at the money calls for day trading with the nearest expiration possible, so that you're not paying for time you don't need, and at the money, hence the 629s. All right, so now price kind of confirms that minor low, and look, it didn't take off. In fact, it didn't even hit my first target, which is 26,062.25. It came back down to that zone, right? So I was actually losing some money here, right? But is that enough to shake me out? No, we're still above the previous session close. So I have a 25% risk on premium paid. So no problem. Irritating, yes. Concerning, yeah, it's nerve-wracking to watch a trade go slightly positive, then negative again. But again, I have some wiggle room built in. I'm not risking 100%. I'm not adding to a loser, nothing like that. I'm just sitting through it like I did with NVIDIA. And then shortly after noon, you can see right there, that's the first target. So now I move my stop to break even, right? And this is actually filming live at 2:20 Eastern, and I would like to, at some point, I really need to scale out again, and I want to show you not so much, this is how much money I made. It was a great trade. It still is a great trade, but more so than someone bragging about how much money they made, let's talk about how we manage risk. Let's talk about how we manage our patience. Let's talk about how we manage the unrealized loss without panicking, without pulling the trade, without adding to a loser. How do we do that? That's really why I wanted to cut this video. It's ending up being a pretty darn good trade. T2 for our room, after we hit that halfway point between the Darvis, T2 is very often 100% return on premium. So as you can see here, we paid right around $2. Once we get up to 450, we've got that 100% premium return. And actually, when I finish recording this video, I'm going to go right back into the room and remind everybody, hey, if you paid $2.25 for these calls, this is your T2 at 100% premium return. So we're taking it at 100%, but remember, I was risking 25%. So even though we're doubling what we paid, this is 4x the risk, right? However you want to look at it, it's 2 times what we paid on premium. It's 4 times what we were willing to risk. And again, focus on symbols above the previous session close. The reason NVIDIA and now QQQ are winners is, frankly, unlike the S&P that I got stopped out of, took a 15% paper cut, these actually stayed above that level. And ultimately, you can see how they kept catching a bid every time we pierced that level, which is a great confirmation of buyers being present, creating that floor. And floors are needed before there's momentum. And that's exactly what we have right here today. So I hope this walkthrough gives you a good idea of what we're doing in the Mastery. I mentioned earlier, we still have a $7 trial. You can check it out at sectorsecrets.com. All right, gang. Thanks as always for watching. If you have any questions, leave them below. Remember, understand the patience you need sometimes to take a trade. Understand how much of a leash you should give a symbol based on where it is according to different key levels. And then let the trade play out, right? Don't get out of a trade because you're bored. Get out of a trade because it's broken thresholds where it's no longer valid.